Welcome back, my friends. As many of you may have heard by now, cryptocurrency exchange FTX filed for bankruptcy protection on November 11th. Since then, the entire crypto world has been reeling. There has been at least one other crypto bankruptcy since then. But many other cryptocurrency companies are teetering on the brink of bankruptcy. Meanwhile, the dead carcass of FTX continues to get picked over in a Delaware bankruptcy court. And every day seems to bring some new revelation about FTX. FTX's $32 billion meltdown could result in fraud charges. FTX founder Sam Bankman-Fried is reportedly under investigation by numerous agencies. And FTX founder Sam Bankman-Fried could face prison time. But many now are asking, was FTX a Ponzi scheme? And was Sam Bankman-Fried just the next Bernie Madoff? And if it is, what does that mean for tax filing in the United States? The meltdown in the cryptocurrency ecosphere shows no signs of slowing. But, where will it stop? What is the real value of Bitcoin, Ethereum, and other cryptocurrencies? What does this mean for the US economy? And, what does this mean for the future of the United States? But, before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. FTX customers will face a nightmare, maybe more than one. This is especially true when it comes to filing their income tax returns next year. FTX legal and accounting problems could complicate matters when it comes to filing on time. In fact, it could take months, or even years, in order to sort out whether they can deduct their losses. There's a good chance that many FTX customers will have to file for tax return extensions. As of the end of 2021, the number of affected taxpayers could be as high as 1.2 million. Much depends on whether federal authorities charge FTX founder Sam Bankman-Fried with a crime. It might also depend upon how quickly investigators unravel FTX's financial mess. There are now special IRS rules for Ponzi scheme investment losses. And whether a criminal proceeding exists is one of the key elements in those rules. Most importantly, the existence of a criminal proceeding would allow for immediate deductions. Otherwise, FTX customers with frozen or missing assets will have to wait for guidance from the IRS. Or possibly even court judgments. They might be able to claim deductions based on gray areas of the tax law. Customers of FTX are in a tax purgatory right now, observes tax expert Victoria Heinemann. Heinemann is professor of trusts and estates at Creighton University School of Law. If you look back at the scandal with Bernie Madoff, he was charged in December of 2008 and the IRS didn't come out with guidance on him until March of 2009, Heinemann says. The IRS created Revenue Ruling 2009-9 as a direct fallout from the Bernie Madoff case. Revenue Ruling 2009-9 instructs taxpayers on how to report the amount and timing of losses from Ponzi investment schemes. Revenue Procedure 2009-20 is designed to give taxpayers a safe harbor method to calculate and claim that loss. If you recall from almost a decade ago, Bernie Madoff scammed around 40,000 investors. FTX's has around 1.2 million creditors, which is a much larger group of taxpayers. I would file an extension and wait for more visibility because I think there is going to be more guidance issued because everybody is all over the board on this, recommends Heinemann. Part of the reason for the guidance with the Madoff situation is the IRS didn't want to deal with a glut of amended returns, Heinemann continued. If you file an extension, you would get up to 6 additional months to file your tax return. So, that would give these taxpayers until October 16, 2023 to file a tax return. Even if an extension is granted by the IRS, any tax is still due on or by April 15. The IRS will charge interest on any unpaid tax. So, actually, it may not be advisable to file an extension. The additional 6 months may not bring any sort of resolution to the matter of tax determination. Taxpayers would be required to make a payment to avoid interest and penalty even if an extension is granted. So, it is a very complicated matter when the amount of deductible loss could still be unknown when the extension expires. Alternatively, taxpayers could also file protective refund claims. Protective refund claims preserve the right to claim a refund when the refund depends on future events that may not be determinable until after the statute of limitations expires, said Heinemann. I'd probably go the extension route just to wait for more visibility because I can't see the IRS offering no input whatsoever, Heinemann says. Whether or not Sam Bankman-Fried is charged with a crime is a crucial factor in how FTX losses will be treated. Personal casualty and theft losses are no longer tax deductible, except in cases of certain particular types of qualified disasters. But losses from the theft of investment property can still be written off. Specifically, in order to qualify as an investment theft loss, a so-called leader in FTX would have to 1. Be indicted on fraud, embezzlement or similar statutes under state or federal law, and either, or 2. Admit guilt or have their assets frozen by court order. Or 3. There are no charges due to the leader's death. Taxpayers can claim a 95% safe harbor deduction on their qualified investment loss. Taxpayers can claim a 75% deduction if they are taking legal action against anyone other than the fraudsters. Tax deductions for loss of capital to be deducted from ordinary income are normally capped at $3,000 per year. So, the tax deduction would have to be spread over many years, depending on the total amount lost. That would be how losses in cryptocurrencies or related investments would be handled. Taxpayers are allowed to claim a loss for what might be considered worthless securities. Basically, the IRS treats cryptocurrency much like stocks and other capital assets. But the Securities and Exchange Commission does not classify cryptocurrency as a security. So you cannot write off crypto as a worthless security. The IRS probably would not allow write-offs of frozen or unsold crypto as worthless. Also, FTX crypto customers may eventually recover something, Heinemann also noted. So claiming your account as worthless might not be correct, Heinemann stated. Add all of that up and taxpayers may be forced to wait. At least until the bankruptcy court authorizes payments to account holders. And that process could take months or even years. An abandonment loss is another possible option, said Heinemann. To claim an abandonment loss, a taxpayer would have to immediately and forever incur the loss. Specifically, the taxpayer would have to permanently surrender and relinquish all rights to the security. And the taxpayer would have to agree to never receive anything in exchange for it. We just don't have clarity right now, Heinemann says. A lot of hassle and many headaches can be avoided if we have guidance on this early, continued Heinemann. To the extent there is no guidance on this issue, and people are all over the board, Heinemann also said. I don't know the IRS is going to turn a blind eye to it, Heinemann continued. I hope that the IRS will issue guidance on FTX by March 2023, Heinemann also noted. If you follow this channel, you already know that Sam Bankman-Fried is the disgraced former CEO of cryptocurrency exchange FTX. And, you probably also recall that FTX was worth $32 billion just a few weeks ago. Silicon Valley's top venture capitalists, like none other than Sequoia, as well as A-list celebrities bought into his act. At least $8 billion in funds from customer accounts are missing. Apparently, the $8 billion was used to backstop billions in losses at Alameda Research. Alameda Research was a hedge fund also founded by Sam Bankman-Fried. Both FTX and Alameda Research are now bankrupt. FTX founder Sam Bankman-Fried is blaming Caroline Ellison. Caroline Ellison is his hand-picked CEO of Alameda Research. And his former girlfriend. Bankman-Fried is claiming that he did not know how extremely leveraged Alameda Research was. Truth be told, he is claiming that he didn't know about a lot of things going on at his vast empire. But he categorically denied committing fraud at his crypto exchange. Fraud is the kind of criminal charge that can result in long prison sentences. The central question is whether Bankman-Fried led FTX customers to think that their money was available. And, specifically, that it was not being used as collateral for loans or for other fraudulent purposes. But, the lack of apparent action by regulators or authorities is infuriating industry observers. Not to mention those who lost their money. The stunning collapse of FTX and Alameda Research blindsided basically everyone. It also took customers, venture capitalists and Wall Street analysts seeming by surprise. Both of Bankman-Fried's parents are established Stanford Law School professors. But Sam Bankman-Fried could face quite a number of potential charges. That includes both civil and criminal charges. There could also be private lawsuits from the list of millions of FTX creditors. Sam Bankman-Fried also founded crypto hedge fund Alameda Research. And Alameda Research allegedly commingled FTX customer funds with its own trading funds. That is the area of most interest to investigators in the bankruptcy court. So, it is fair to say that Sam Bankman-Fried actually controlled Alameda Research. And I think that he selected Caroline Ellison to be the CEO of Alameda Research just so that he could control the company. How could he not be aware of that state of the balance sheet of Alameda Research? Personally, I do not believe that any of the creditors will be made whole. In fact, I think that they will have lost everything. Bankman-Fried claimed he was unaware of the nature and extent of Alameda Research's exposure. Now, the holders of FTX stake are coming clearer. The crypto crash rages on. Cryptocurrency projects have collapsed and bankruptcies have occurred across the crypto industry. Warren Buffett, CEO of Berkshire Hathaway, has repeatedly said that cryptocurrencies are worthless and have no intrinsic value. He clearly thinks that the current crypto winter is a prelude to the eventual death of cryptocurrencies. But, what do you think? Please hit the like button and leave a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.